Hi, and welcome to Twin Cities Real Estate Rhetoric. My name is Tom Sommers, and I'm joined by my co-host, Tovi Muma. Hey, Tovi.
Good afternoon.
How are you doing today?
Good, thanks. And you?
I'm good. I want to
Awesome.
welcome everybody who is tuning in to watch our webcast, podcast, call it what you like, whether you're on iTunes or you're finding us on YouTube or Facebook, wherever you are. Welcome. Today is episode number 5. We're going to be talking about real estate value, pricing your home to sell in this market. Before we jump into this piece of it, I want to let everyone know that we're going to be breaking this down by prices section so that you understand that there's different things for pricing in each area. There's obviously common denominators that we take into account with all pricing of different homes, whether it's townhomes, single-family homes, condos, but we want to let you know that there's different strategies for the price point that you're in.
That's right.
So, Toby, do you want to start off? I suppose let's talk a little bit about what's going on in the current market.
Yeah. This year, we've been seeing in the newspapers already, 2013, that, hey, prices are up. It's a good thing. The trends are up. Those prices that are up, I want to say, are particularly 200,000 and under.
Yep.
I think if you look at past reports, 2011, the average home price sale in the Minneapolis Twin Cities area was about 155, and the end of 2012, they're saying it was about 169.
Okay.
So that is definitely where we're seeing prices are on the rise.
Yeah, which is a big jump, which is good, but it doesn't
yeah.
necessarily mean that all of a sudden, if your house was worth this, now it's worth that. You have
Right.
to look at the comps. That's the bottom line.
Exactly.
And another thing I'd like to point out, too, just to maybe give people a little perspective, is that in 2009, in the Minneapolis-St. Paul area, we had over 47,000 listings, which maybe doesn't sound like a lot, but that really is. And then as of, July, I think, of 2012, we were down to under 17, which is the lowest since 2000.
Exactly.
That's a huge drop. So
Huge.
part of this recovery is simply based on the fact that, people have given up, and now we have less supply and more demand, which is what's
Right.
driving the prices up. But they're not going through the roof. It's recovering, but it's recovering kind of slowly, but higher in some areas than others.
Right.
So we wanted to point that out ahead of time before we started to dive into the price points. So everyone I want you to think about that going into this, because sometimes it's great that the newspaper is positive and they're talking about all these wonderful improvements and the housing market's recovering. It's all true, but you want to know why is it improving and to what degree.
Right. And because if you're 400 plus, but you don't see prices increasing, that's because they're increasing in the lower bracket, under 200. Right. So anyway, yeah, we'll get into it in each segment. So
let's start off then with under $200,000.
Okay.
This market is comprised of townhomes as well as single-family homes and condos, which is true with all markets. But specifically, this market is a first-time home buyer market for a lot of people.
Right.
We've seen a huge jump in value here more than any of the other brackets simply because there's a larger buyer pool and there's a lot more foreclosures and short sales, or at least it appears that way. So it seems like there is a lot more people fighting for fewer properties.
Exactly. And I find that true. I think that, there's investors out there as well that are, buying up these properties for rentals, not necessarily in the townhome category, but for single family homes. So, there is a large market. And when people think of foreclosures, I think before they always thought of foreclosures as being dumpy, needing to totally be redone, and it's not that way anymore. Banks are realizing that these houses have to look good. We put new paint in, we put new carpet in, and to get them sold and get the first-time home buyer in homes.
Yeah, and you're competing with those foreclosures, and that doesn't mean that you have to compete with them in the pricing structure, because when an appraiser comes to look at the value of your home, they'll look at other comparable sales that are non-foreclosure sales.
Right.
But you want to know that your competition in some cases can be foreclosures or short sales. So you have to make sure that you know what those values are, and you have to give the buyer more value for their dollar when you're competing. So it doesn't mean that you have to drop your prices, but you have to be very aware of what's going on around you.
Exactly.
The next one would be $200,000 to $300,000.
$200,000 to $300,000. Yep.
Yeah, right. This is another move-up category, but it's also still a first-time home buyers area because you could still have a lot of people who have a dual income and they can easily afford a house in between this area.
Right.
So you're seeing a little bit less in the foreclosure activity in this price range, depending on the city and the area that you live in. So you still have to be very aware of that. But now we're starting to see more value for the dollar. As you go up in price, the buyers are starting to expect more and more for their money.
Right.
So when we're pricing these houses, one of the things we're looking at is amenities.
Right. I was just going to say, 200 to 300. Before, a couple of years ago, we'd say 300 plus. You definitely have to have stainless steel and granite and that kind of stuff. Nowadays, between 200 and 300, you have to have granite and stainless steel and those kinds of things. Those are almost expected in this price range.
Yep.
Again, it's still the first-time home buyer or couple buying, but it could be people that have sold their property that was 200 and under, townhouse, and got married, and now they're moving into the 200 and 300 price range.
Yep. And also, too, I think in this price range, you start to have to look at a stager. And
Yes.
cleanliness is the most important thing. The cleaner and more well cared for the home, the better chance you have of getting it sold quickly and at a higher price. So that's another way to
Exactly.
compete. You don't always have to dump a ton of money, but you better be aware of what your competition is doing, because once we get into this price range, they are starting to give some of those extras.
Yep. And one other thing I want to say, in the 200 to 300 price range, I have kind of run into that some of these people, they need to sell their house and they want to move into the 300 and 400 range, but when they bought in the 200 and 300, they may, pretty much be just breaking even to go into the next category.
Right.
But anyway, it was just a
Well, no,
side note.
and that adds to the whole idea about needing seller-paid closing costs.
Yes.
So you're going to want to factor that in. So again, you want to be aggressive in your pricing. You don't have to give your home away, but you want to know what the buyers are expecting in the market, because that's a piece of this whole puzzle.
Yep.
So make sure that you're aware of that. Along with, of course, we always go through comps and give you all of the solds, and we look at the current pendings as well as the ones that are active. But you really want to know your competition at this price point, because as we go up in price, the buyer pool gets smaller, so you're fighting for more space with less people.
Less people. Yep, exactly. Very good.
Next one would be 300 to 400,000. The reason that we're breaking it down in these increments is typically they all seem to kind of go hand in hand up to this point. So with the 300 to 400,000, believe it or not, it's still a first-time home buyer's market to a certain degree. It's definitely a lot less than the 200 to 300, but again, you still have to be aware of that. And a lot of these younger buyers that are first-time home buyers now are really looking for not only square footage, which is really going to count here, but also amenities are even more important.
Right.
Toby, tell them a little bit about how new construction now comes to play.
Well, new construction is, you can build, well, I'm thinking down in Lakeville, Farmington, down in the South Metro. You can build a new home for probably $379, and you're going to have what the new buyers are looking for, and that's usually 4 bedrooms up, a master suite with a master bath, large closet, also a game room up or a rec room up, and then a full finished lower level with hardwood floors or the new engineered floors, which are really popular, granite, stainless steel. All that stuff is available, and for $379, $389, it's amazing what you can buy with new construction.
Yeah.
But then there's also, the existing homes sales. Those are having a hard time selling because, just simply because people they can do the upstairs laundry, the rec room upstairs, and they can get everything brand new in a brand new neighborhood. And it's a hard thing to balance. I mean, it's
Well,
a
yeah.
hard,
And we don't want to dissuade you from saying, okay, well, if you live in an established neighborhood, you can't get your home sold. The
right,
point
no,
that Toby's trying to make is that now you're competing also with new construction. So it's
exactly.
even more important that you have the upgrades and the updates and that your house is clean and move-in ready. You want it to look as much like a model as possible. And maybe
Right,
some of you are sitting here going, well, what are you guys talking about? You're not giving me pricing strategy. That's a whole nother thing. This is part of the pricing strategy that we wanted to cover, because
right.
if you don't have what the buyers are looking for from an amenity standpoint,
Yep.
then you're going to have to pay for it by pricing it lower.
Exactly.
So if you're
So,
in a home that say is 10 years old and it's a standard 2-story, and you're in Plymouth or you're in Anoka or wherever it might be that you are, but you have a house that should be worth 375,000 and you haven't changed the carpet in 10 years, you have I don't know, vinyl flooring, you
right,
have old appliances, and you have a Formica countertop.
right.
You've got some things to do to be able to compete with these new construction
Right.
homes.
Yep. And it is, and it's buyers, they like to walk in, and every house they look at it as a new model home. So when they're looking in a brand new model home and they're looking at your existing home, even if it is staged beautifully and everything, just it's kind of for some reason just appealing to them, or
Right. Well, and then the parade of homes just screws things up and makes everything
yeah.
worse.
And
All
that's
right.
coming up.
So that's another thing too. If you're going to plan
Right.
to sell and you're trying to think, well, I'll wait for the parade of homes, it doesn't give you any advantage, because then what happens is people go through a $600,000 house, fall in love with it, come back and look at a 300, and then they're disappointed because it's not the same. Well, it's like
Right.
there's a $300,000 difference here, but buyers don't think about that stuff.
Right.
So it really comes back to taking care of your property and having it ready for sale.
Right. Yep.
Next one would be 400 and up. I know that this is a huge range to go from. Tovi, and I talked about this before we decided to do this podcast today, and decided to do this in a larger format, because once you get over 400,000, a lot of things can happen. And what we're noticing is once you hit about $400,000, the prices really have dropped because of the foreclosures of the more expensive homes.
Right.
And the other piece of that is the fact that there are much fewer buyers over 400,000.
Right.
And so this is going to be a real case-by-case basis.
Mm-hmm.
This is really an area where you're going to be competing with new construction, right?
And homes over 400,000, even if you just want to say between 4 and 5, there's, and again, I'm talking in the South Metro right now, but you can have a house that's 450,000 that's on 10 acres, and it's a big, beautiful 2-story house, but you can have that same house in a neighborhood, big, beautiful house, but in a neighborhood. And I mean, what's the difference? How do you differentiate? So that's where it's every property is going to be a case by case, scenario, and what it brings to the buyer, what they have, what they want, acreage or neighborhood, etc.
Yeah, and then when we're looking through this and we're trying to help you comp out your value, we always look at it from the standpoint of what are the appraisers going to see, because it doesn't
Right.
matter if you sell a home or you get a contract for something that's $50,000 over what it's going to appraise for. The deal's dead. So you have to
Right.
be priced appropriately. So we look at leading indicators, lagging indicators, and current indicators when we're working on these markets to help us
Right.
determine where you are within the marketplace. And also too, like Toby was saying, case by case basis. If you're on 10 acres, then we can go into a much wider circle to pull up comps, whereas if you're in a neighborhood, you really got to stay within 2 miles.
Yep.
And same with townhomes. You can't have a 2-level townhome for $175,000 and compare it to a 1-level townhome 5 miles away for $250. The comps just
Right.
don't work.
Right.
So, you got to make sure that you price this right, and you have to know what's going on in the current market as a piece to the puzzle of helping you figure out, how to price the home.
Exactly.
So, all of them have their challenges. This is a great time to sell, especially if you're moving up to take advantage of the low interest rates and the phenomenal prices. We just
Right.
don't want you to think that somehow this is magically gone from, 30% worth of loss over the last 4 or 5 years on average in the real estate market to all of a sudden, because there's 3 articles in the newspaper telling you that it's jumped back up to 30. There's a
Right.
lot of great opportunities. Yes, we're seeing, an increase, comps, but you got to make sure that you're working within those comps.
And one thing I need to say to that is it's now a buyer's market.
Yeah.
I mean,
Yeah.
the buyers are calling the shots. And you know what? The buyers have all the information at their fingertips, and nobody's going to pay anything more than what they feel your property is worth. So,
yeah. And she's absolutely right. So before you price your property, you really need to look at what's going on in the current market around you.
Yep, or in your price range and in your neighborhood, and
Look at the comps too.
yep,
So
exactly.
I guess that's it for now. We're going to wrap it up. Thank you
Right.
for taking the time to tune in and watch this. And as always, I'm going to say, if you have any questions, you can find us on our Facebook page. You can send us an email privately, or you can give us a call. We're happy to answer any questions that you might have. Please feel free to leave comments as well, and we will pick it up and use those for future broadcasts.
Wonderful.
Have a wonderful, wonderful week. Thanks so much for tuning in, and we'll see you again next time.
Thank you, Tom.
See you, Toby.